Alright, what's up guys? It's Jeffrey with another video, and today we're going to be talking about what every trader should do. And I highly recommend that everyone watching this video follow these steps, or at least try implementing them into your trading plan, because by doing that you're just increasing the odds of you becoming a successful and profitable trader. So the first thing that I want to go into is only trading during session times. So one of my mentors is Inner Circle Trader. He goes by ICT on social media and stuff. And one of the things that he teaches is his kill zone times, and those are the ones that I've put up on the screen. It's 8 p.m. to 12 a.m. Eastern Standard Time for Asian session, 1 a.m. to 5 a.m. Eastern Standard Time for London session, 7 a.m. to 10 a.m. Eastern Standard Time for New York session. And these are the best times to enter a trade during the session. So the sessions are longer than this, but highest probability for your trades would be during these time frames. So if you incorporate this into your trading, I think it's a really good thing to test and see how it works with your style already. And a really important thing for any of the new traders that are watching, if you're not using a demo account, make sure that you start with a demo account before you start trading with real money. And if you don't know what a demo account is, it's basically just it's a real account, and it works, just as any other account would on the real markets, but you're just using basically fake money. You're not using your own money, you're just using money that the broker's letting you use, and it can't be withdrawn, it's all fake, but it's moving alongside the markets real time. It's all live. Like there's no difference between trading with a real account or a fake account on the markets. It's trading the same, price is the same, it's no different. So start with that, practice, understand how the market moves, what you're looking for, find your setup, build a trading plan, make sure that you're following a set of rules and you're not just entering trades just because you want to try to make money. So a demo account is really key. Even as an experienced trader, it's still good to use a demo account. Like this week was FOMC, so for Wednesday I traded on demo. I wasn't trading with real money because I didn't want to put any real money at risk during FOMC. FOMC can have major spikes of 100 pips both sides, up and down. So I'm not willing to risk real money under those conditions. So you can use a demo account. So even as a experienced trader, it's okay to use a demo account. Don't feel bad that you're using a demo account, because you're practicing, and that's only going to allow you to develop and advance once you start your own live account. So if you're not practicing, then there's no way that you're going to make any profit or ever be profitable. So make sure that you're practicing consistently. And once you got your demo account, you're set up, you're squared away, you got your MetaTrader installed and all that, the first thing that you want to do is open up your browser and go to tradingview.com, search DXY, that's a dollar index, and that is basically the king, right? Dollar index will tell you what's going on with the majors, and all the majors are anything paired with the US dollar. So that could be Euro USD, GBP USD, AUD USD, USD CAD, USD JPY. All of those are considered the majors. So go to TradingView, search DXY, and you want to start on a monthly time frame. The reason you're starting on such a higher time frame is to be able to see where the market is likely to go. So by starting from a monthly, you have a really wide view of the market in a super long time frame to see where they're most likely to want to bring price. So you're going to start on that monthly time frame, mark out all your support and resistance levels, all the way from the monthly down to the hourly time frame. So that's going to allow you to get a really precise read on the market and just have more clarity of what you're looking at, and it's not just a bunch of candles on the chart. So and the point that you're doing this is whenever the market is trading during Asia, London, New York, you're going to wait for them to trade dollar index into a key level of resistance or a key level of support. So that'll be any of those levels that you marked out on the hourly, the H4, the daily, the weekly, the monthly. If it trades into one of those levels during Asia, New York, or London, you know that more than likely a trade's about to form. So you're not just going to enter it right away. You're going to wait, for whatever you wait for with your trading plan. I'll go into it in another video, what I look for specifically, but you're going to wait for that to happen during those time frames. So now you have multiple things in line that you're waiting for to happen. So you have a plan, and this allows you to have a better read on the market. So after you've got that all set up, then you're going to want to choose your pair. So I would recommend choosing any pair that's paired with the dollar index. So you can choose Euro USD, GBP USD, USD JPY, USD CAD, any of that. But I don't want you to start looking at 10 pairs, because if you're looking at 10 pairs, you're not able to focus on the charts and really, see and understand price action. So you're really able to narrow your focus by just having one pair. I recommend at least studying it for 6 months before you add a new pair. That way you can really see what this pair does over at least a 6-month period of time. So you'll see what it does every day for 6 months, what it does every week for 6 months, every month for 6 months. You'll really have a clear understanding of this specific pair and how price moves, for this pair during specific times, specific days, specific weeks, months. And with whatever pair you choose, you want to break it down just like you did with the dollar index. Start on a monthly time frame, mark out all your support and resistance levels, and then work down from there. So work down from a weekly, a daily, 4-hour, and hourly chart. So you want to set a weekly pip goal too. I would recommend like 50 to 100 pips a week is a good objective, but you don't want to say, oh, I want to make 400 pips a week, because the likelihood of that happening is just unrealistic. It could happen, in 1 week, but it happening every week is just highly unlikely. So you want to set a realistic number of pips to achieve on a weekly basis. And once you've achieved that goal, whether it be 50, 75, 100 pips, you want to stop trading. The moment you hit your goal, stop trading. Go do something else, turn the charts off for the rest of the week until the next week. By doing that, you're disciplining yourself to walk away from the markets, and you'll be profitable that way, because once you've achieved your goal, you're stopping trading, and then next week you'll do the same thing. So you'll be plus 200 pips in 2 weeks if you stop trading. But a lot of times what people do is they'll be up 100 pips, and then they'll go and they'll put more risk behind their next trade, and they'll go and draw down 20 pips, but they lost all of their profit for the week because they over leveraged and they were impatient, and they just wanted to make that extra 20 pips on that standard lot. Like it's not worth it. So make sure that once you hit your goal, you're stopping trading. And real quick, I'm gonna go in and just kind of show you guys an example of what to do with the dollar index. So tradingview.com, you can search DXY, click interactive chart, and then right here you can break it down to a monthly, and then you're going to want to mark out your support and your resistance levels. So the way I mark out my support and resistance is, again, from how I learned from ICT. Inner circle trader, I look for bullish and bearish order blocks and ICT breakers, and I'll make another video on those, but mainly you're just looking for, where has the market stayed at for a longer period of time. So you see we've got a consolidation around here, and where is it right now? It's around this level, which is what? A resistance level. The market came up, traded lower, came back up, traded lower. We've broken that resistance level now, and we've traded back into it. Last month it's pushed up higher, so it's acted as support so far. So this is just classic old resistance became support, right? So, and then we can look here. We got support, support, came down, broke through it, retested it as resistance, right? So support, 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 came down, broke below it here, but came immediately back up, support, broke down, resistance. So that's on a monthly time frame. So now we know where we're working in between, right? We don't want it to go higher than here, because then we're going to expect it to go higher. And if it comes below here, we know we're right on our bearish bias, and that it's going to continue to go lower. So an example real quick, without going into detail, this is an ICT bearish order block. It is 2 up candles before a down move. If it trades back up in here, which it already has kind of traded up into the low, and then it started to trade down, so it may not want to come back up into it anymore, but it has started to show resistance so far. But I wouldn't expect this high to break. So it can trade anywhere in here, but I'm expecting a new lower low to form because we're in a bearish bias. We got a high, we got a low, which broke these lows. So breaking market structure, this is a lower low, lower high, lower low. So what would we expect to happen in this area? Lower high, lower low, down here. So to draw that out, that's exactly what I'd be looking for. And keep in mind, it could just start breaking down now. It could just break down from here, right? We don't know. So that's why you have to break it down on lower time frames. Go down to a weekly. Okay, do you see anything clear? So like this could potentially trade up in there. And again, I'll make a video on this, but this is just a breaker setup, ICT breaker. Look down on daily. See how we're just consolidating? This isn't high probability for trades, right? When we're just ranging sideways like this, I don't really like to be trading with live money too much, just because it's just consolidating, right? We don't have a clear direction. Although we think it's going to go lower, it could want to come higher before they send it lower. So we really need them to give us a clear direction. They need to break this to know that we're going to go lower. Or if we break back above here, then more than likely we're going to probably want to come back up in here. So how that would look would be, if our pair is Euro USD, for example, we'd do the same thing. We'd start with a monthly, we'd break it down, mark out all our support and resistance, but this pair is going to be inverse of the dollar index. See, it's Euro USD. So euro is before the dollar, so it's inverse. So the dollar was moving down, Euro USD is going to be moving up. So we would want to do the same thing. We'd want to mark out here. You could see it was support, support, came back down, traded up into it. Now it's acting as resistance. But we would expect this pair to go higher. We don't know. Does it want to trade down into this bullish order block and form a higher low right here before making the higher high, or does it want to just shoot up? So, again, that comes with breaking it down and then going to a lower time frame, weekly, daily, marking out your levels. But again, we're just consolidating, so we don't really know we think it's going to go higher, but we don't know, do they want to take it lower first into this bullish order block and then make the higher high? So it just, it's, you have to study, you have to basically practice. And this is why it's good to start with a demo account, because when the market's just consolidating, you can just be testing stuff and practicing along the way. So that's it for today's video, guys. If you're watching on YouTube, make sure to please like the video and subscribe to the channel so you will see any new videos that I post. I'm going to try to post at least once a day and provide you guys with as much trading information as I can. Leave a comment down below. Let me know if this was helpful, and also if there's a specific video that you want me to make about something that you're struggling with in your trading. That's it, guys. Thanks.